Hi everyone, Matthew Levy here, portfolio strategist at Wealthmore, and welcome back to our spring economic update. This week we're going to unpack kind of what's moving markets. Some inflation numbers just came in. We want to look at the economic outlook, and of course we want to talk about the recent trade thaw between the US and China, which everyone was not expecting, but did happen. We want to look at why the market surged. We want to let you know what it means for your portfolio and why now more than ever, staying invested is going to be the right play. So let's not bury the lead and let's start with the biggest surprise. There was a sudden pause in the US-China trade war. After months and months of rising tariffs and tough talk, both sides suddenly agreed to dial it back, at least temporarily. The US dropped its China tariffs from 145% to 30%, and China did the same, dropping from 125% to 10%, at least over the next 90 days, where they will continue their talks. That was enough to spark a huge rally in the markets. The Dow rose over 1,100 points. The NASDAQ entered a new bull market, which just means it's 20% higher than its recent low, and the S&P rose over 3% on just that day. It's not all sunshine. The truce is temporary, like I noted, 90 days. Tariffs are still much higher than before April 2nd. And for companies, companies are trying to run a marathon, build their business on a treadmill that just keeps changing speeds on them. So trying to plan for what comes next is incredibly difficult. And not only that, but that uncertainty, you've probably felt it yourself, it trickles down to the consumers as well. You might save a little bit more instead of spending, or at least you might hold off on some spending until you get some clarity on what's kind of going on in the economy. Still, overall, great news for markets, clearly. Next, there was a recent inflation report for April that just came out. To be honest, it's a little bit early to call the win or loss on inflation. It's kind of like checking your bank balance and seeing nothing new, no surprises yet. Inflation came in at 2.3% increase year over year from last April. That was the lowest number since February 2021, so good. And it was up just 0.2% from the previous month. All good news. Of course, it's important to note that we're in the early innings of seeing what these tariff impacts will really be. Why, you might ask? It's really because the prices we're seeing today are kind of from deals made a few months ago. But as these new tariff costs come in, costs will probably rise. Furniture, car parts, electronics, we're already seeing those prices creeping up a little bit. And most businesses are going to try and not raise prices if they can, but they can only do so for so long. They're going to have to pass those costs on at some point. Core inflation, which is a little bit different, it excludes food and energy prices, and it's what the Federal Reserve does watch more closely, was still 2.8% increase. So that means the underlying pressures are still kind of there. Where does this leave the Fed? After a number of rate decreases in the recent history, well, they're basically in wait and see mode. They came out in their last meeting and said, we don't want to make any moves quite yet. We want to wait for more data. If inflation stays under control, rate cuts could come later this year, but those tariffs are, even the lower rate tariffs, they're still kind of making things uncertain. So they're holding off any moves for now. And here's the thing as well, even though inflation did cool in April, we're going to see more bumps this summer as these tariff impacts really start to affect costs and companies. That could mean more market swings, more headline anxiety like we saw in April, and honestly, more reason to stick to your long-term plan. The noise is out there. You got to ignore it sometimes. If you felt tempted to react to all of this uncertainty, especially in April, you're not alone. Everyone goes through it. Money is emotional. There's no way around it. But those investors who came out ahead this spring, they didn't do anything. They stayed invested, they stayed diversified, properly diversified, and just trusted the process. And sure enough, the biggest winners are those who didn't panic, especially in April. Markets were headed for their worst month since the 1930s. And now, it's just normal for what long-term investing is like. The S&P 500 is now positive year to date as of this recording. So, don't hold me to it if it takes a few days to post this. But it's really a testament to sticking to that. And then just we want to do a little Wealthmore takeaway. It's that markets are always going to face shocks. You know, it's nothing new, whether it's tariffs, inflation, or something else unexpected. You can't control what the headlines and what's going on in the world, but you can control your strategy. So stick to it, stay diversified, stay invested, and you'll come out ahead in the decades to come. Don't think of it month to month or even year to year. Think of it, 5 years to 10 years to 20 years out. Anyways, thanks for tuning in. We'll be back again with more insights, but until then, stay informed and happy investing.